So we got a big NFP, which is non-farm payroll jobs revisions and new data yesterday, which is what the Fed needs to make the decision to cut rates. If they had that data prior to their meeting last week, they would have cut rates. We're probably at an 80 to 85% chance that we'll see the cut in September. Hopefully the data continues because we saw this last September. We saw a big 50 basis points Fed rate cut, and then data came out afterwards and mortgage rates shot up. So again, Fed cut's not going to immediately drop mortgage rates. It has a loose correlation and can eventually help them, but we would see rates improving leading up to the cut. We did see a big movement yesterday after the NFP came out. We saw the numbers came in lower as expected for July, and May and June were revised to the two biggest drops ever for monthly revisions. So that is what we needed to see, some weakening in the job market. We need to see inflation stabilize as well. We'll see more with these tariffs as they come in, but that's what the Fed was looking for. That's going to give them the reason for the cuts. We hadn't seen that data. Now we have, so I would bet anything that we're going to see a Fed cut in September and probably one before the end of the year as well. So I would say two cuts before the end of the year. Hopefully this is a great trend that we keep this momentum. We get some lower and lower rates. Rates are in the mid to low sixes at this point for conventional and the upper fives for government loans like FHA and VA at this moment. So if you're looking to start the house buying process, make sure you reach out to us. Also, if you have a rate that's 7+, it might not be a bad idea to start looking at possible refinance because these rates can drop, but they can jump back up quickly as we saw last year. Let me know if you have any questions. We're here to help.